Good afternoon. This is Tony Hixon coming to you from Hixon+Zuercher offices here in Findlay, Ohio. Today we're experiencing a little bit of snowfall outside. I think we're going to get around 6 to 8 inches of snow, and just yesterday it was 55. So crazy Ohio weather continues to keep up. Well, it's been a few weeks since we've had an opportunity to provide an update, and so we wanted to let you know a little bit about what happened in February, the month of February, news that affected the markets last month, and also give you some thoughts on news that might impact the portfolios for the next days and weeks ahead. So I guess to start off, after disappointing performance in January, February stocks came roaring back. In fact, the S&P 500 closed at a record high, gaining 3.2% during the month. The Dow gained 4.3%, the NASDAQ was up 5%, and however that started to taper off by the end of the month, mainly because of the news that was coming out of the Ukraine. So the Ukraine's president was ousted, and there was a threat of war with Russia, and traders began to get kind of worried about this news. The main reason being because of the disruption in supply of natural gas and oil. But news of that since then has kind of tapered, and at this point we don't hear much about it anymore. So typically geopolitical events like that have a temporary effect on the markets. However, we're constantly watching to see what might happen in that situation, and we'll take immediate action if we see that we need to. I guess turning to earnings season mostly wrapped up last month. So 487 companies of the 500 S&P 500 companies reported, and earnings grew from Q4 2012 to Q4 2013. It grew by 9.3%, so it was a really good earnings season. However, the great news was tempered by the fact that revenue only increased by 1%. So that shows that even now we're still struggling with weak global demand. However, it is good news to think that even in these kinds of business conditions, companies are still earning profits and revenues are still growing. So when demand does pick up, we're very excited and encouraged about the potential upside in the markets. Also in February, economic data was kind of a mixed bag. The winter season continued to have its grip. Construction industry, manufacturing, housing markets all kind of got hit. But it's very explainable when you realize that most of the country was under the winter gloom that we had. Also, the January jobs report was weak too, but that is also explained by the weather that we've been having. In fact, we're already seeing in the February jobs report that the continued weakness in the labor market is there, and we're thinking that once weather starts to warm back up, we'll see some positive trends in the employment arenas. On a more positive note, during the month of February, consumer confidence actually ticked upward, and this is in spite of the weather that we've had. So we're encouraged to think that once warmer weather does set in, that consumer confidence will continue to increase, therefore increasing consumer spending, which has a positive effect on the markets. During the month of February, new Fed Chairperson Janet Yellen had her testimony before the Senate, and basically she reassured markets that tapering would continue unless there was enough negative economic data to warrant a pause. She also confirmed low interest rates for the time being until she sees, and her committee sees, that economic data will start to improve. Looking ahead, volatility. Bottom line, as news continues to pour out of emerging economies, it pours out of the Ukraine situation there, and also the continued effects of the winter weather we've been having. We're expecting volatility in the markets in the days and weeks to come. We're using those times, any pullbacks that we see in the market, to invest cash, to put more money to work, and to dollar cost average in at cheaper prices. So even though volatility is in the forecast, we certainly are using those as good opportunities because we see brighter skies on the horizon. So this concludes our monthly economic and stock market report. I would say that we do have an upcoming event. It's next Friday, March 21st at noon. My business partner, Adam Zuercher, will be conducting a live webinar called the 2014 Tax Strategies Update. I invite you to come to www.hzcapital.com. In the middle of the page there's a Register Now link that you can click on and register for that webinar. It'll be very insightful and informative and give you some ideas to save taxes here for before the April 15th deadline. Again, that is next Friday, March 21st at noon. Once again, this is Tony Hixon from Hixon+Zuercher Capital Management, and signing off today, Wednesday, March 12th, 2014. I hope you found this video insightful and informative, and if you have any questions, please leave them in the comment field below. If you have any questions on your personal financial situation, please give us a call at 419-425-2400, and we'd be happy to help. On behalf of the Hixon+Zuercher team, have a great week, and we'll talk with you again very soon.